Hey Puppy Trades! I wanted to do a video analysis update, really just because Jason asked for a stock market update, so it is going to take some parts. This is part one, but really this was a huge conclusion that I was coming to. I was making this video for Jason because he asked and for an update on the stock market. So I'm going to give a couple unprofessional opinions in a series of videos that are not investment advice to in any way to anyone, including Jason. But I will tell you, I use this information and everything that I do, everything that I present in this video, I use this information in my own brokerage account to invest. I want you guys to know that, and I want you guys to know I would be doing all of this research without this YouTube channel, and I would be doing all of this research without this X channel. And quite frankly, this is genuinely the most efficient way for me to keep track of all this data and my predictions, and it's really worked out. So just one of the big conclusions of all, you guys know how much I keep up with the stock market. One of the big, for years, one of the big conclusions that I was coming to, and I wrote it down, Exhibit 8, in one of these videos that I was going to make for Jason, was about real estate. SRHR and RQI. And I personally was thinking about the best ways to invest in real estate today. So the sums and the conclusions of all the analysis that I was going to make for the broad question of updating the stock market was that real estate is a really important sector to understand. It could kind of run away, and there's a good technical evidence, in my opinion, that real estate is set up to I perfectly predicted numerous home builders. So you probably remember when Finchwit was full of people telling people to sell their houses, sell your house, even if you got in at a really low interest rate. Why does that make sense? I don't know. Well, haven't prices for houses exploded exponentially, and we go up $1 trillion in national debt every 100 days now, and we're telling people to sell their houses. Okay, well, anyway, Finchwit was full of people like that, and they're collecting their X checks. I called one of them out, and he made his account private, so I'm not sure what that did to the X check, unfortunately. I think dividends are better than X checks, and one of the other big themes of this update I was going to make for Jason was that was a big development, that all these dividend ETFs have exploded out of nowhere, and there is basically an arms race. One of the ETFs that I'm going to talk about in this video, SRHR, that I do invest in, it's not very liquid. It only has about 160 trading volume shares. That's kind of a little too low. So I was looking actually for better ways to invest in real estate. And by the way, where I was going with this TA was that what I'm going to get to in this video, I think there's a good chance that the real estate ETFs are going to follow the home building ETFs. And because of that liquidity issue I just mentioned, before I mention the other thing that I'm going to mention in this video, before that happened, I went on ChatGPT and I said, this was today. I promise this was today. I'm pretty sure ChatGPT has the records. This was today. This was before any news broke. This is the whole sum of all my analysis for one of the most important things. And then for this big, this is a core position, in my opinion, that I'm worried about running off. So for my personal investing, this is huge. If housing prices run off, and other things that I'm worried about from an inflation perspective, that could be trouble. That's going to affect my life. Anyway, so I asked ChatGPT, I said, what are the best real estate closed-end funds for high current income and positive total returns? ChatGPT said, choosing the best closed-end funds For high current income and positive total returns, in real estate involves considering various factors such as the fund's track record, expense ratio, dividend yield, portfolio composition, and management team expertise. Here's a few real estate closed-end funds that have historically performed well and provided attractive income. It listed the Cohen and Steers, Quality Income Realty Fund, and 4 or 5 others. 2 of them that it listed, by the way, just on a side note, they're non-traded ETFs. One of these ETFs that says it's ran by Invesco, if you go type in that ticker, it's going to say it's run by the University of Massachusetts club. So be very careful with data from ChatGPT, but I do use this as a very valuable resource. And so I asked it today, what are some of the best real estate closed-end funds go? And I knew RQI was going to be at the top of the list. So I am not the person that really, I'm not some super expert in real estate investing. There are people who dedicate their lives to understanding real estate markets, and I personally think there's better places for me to really get into closed-end funds and real estate closed-end funds. So I'm going to wait on a deep dive into RQI. But this was a fund that I was, and I'll do the technical analysis of this. This is the fund I was considering. It's got an 8.12% distribution rate, and the total returns for its inception, which is real easy to find right here in the ETF total return calculator, just blindly averaging into this ETF. I think this is since its inception. How long has this ETF been around? I usually assume none of these ETFs are older than, let's see. So since its inception, it's got about a 9.41% annual total return, blindly averaging into it. Now, for some of these other funds, I later ask about the best ETFs. For some of these other funds, we'll see that that's kicking the teeth in on most of the real estate sector. So we'll make sure we get the exact same times. But this is SCHH. I'm going to do a analysis of this in this video. This is SCHH. This is the Charles Schwab dividend ETF. Notice, since its inception all the way through, and V&Q, very similar performances with these, all the way through, about 3.74%. RQI, that management expertise and all of that, the expense ratio is there. And by the way, a lot of that expense ratio, I always make sure I'm differentiating, especially for a closed-end fund. I have to realize that the expense ratio, I think, is about, we can check in 5 seconds. But RQI destroying SCHH by a large factor. So it looks like that expense ratio is going to be worth it, in my opinion. And one of the things that I was going to say in the video is that this closed-end fund is trading at a 6% discount to NAV. And I checked that just by going up to the top of this website and funds. It's got funds are somewhere down here. And then I click on funds. It says what the discount is. But just looking at this, I'll get the expense ratio. Common assets expense ratio versus the managed assets expense ratio, 1.45% to 1.91%. So with these leveraged closed-end funds, that is higher than any ETF I invest in by far. Realistically, I want to keep my average expense ratio usually around 0.5 or below if the fund is really, really good. And that's with some, usually most funds aren't going to be able to outperform a blend of JEPQ and JEPI, and those funds are going to have a 0.35 expense ratio. Also, most funds, I don't believe, are going to outperform BALI, and that has a 0.35 expense ratio. But sometimes for very specific things like real estate, good management team, and that alpha with the fundamental backing of real estate. Because another thing that I was going to talk about, and I did talk about in my most recent video, make sure to go watch that, is that agriculture. By the way, I mean, just so you know, I warned a family member I care about that expenses could get really high. Just they did ask, but and I told them expenses, and I specifically told them this ETF was an ETF that they needed to look at and kind of maybe understand those types of things in this ETF could get very expensive. So that's something that FinTwit doesn't like to talk about. That's called upside risk. So I will personally tell you, if MOO goes to the moon, then that is going to have a big effect on my finances in an extraordinary way. And I expect personally that that is going to happen until the length of wave one, place of the wave two low is reached in the long term. And that is all the way up into the 130s. I went into a deep dive on that in my last video, but just this general in the big options trade. By the way, a huge options trade made on that. Huge options trade made on that on Friday. I went into all of that, and just on just a little more broadly, I think I have IEMG already marked up. Inflation, just for a little more inflation evidence. I'm looking for MOO to hold above 67. I think it will. Just for a little more inflation evidence, I am blending IEMG. This is another kind of similar theme. I am blending IEMG with EMCC, and that's running covered calls, but this is also something going to be correlated with inflation. And so this is something that I'm thinking about. This is huge, and this could be a 1-2, 1-2, 1-2 Elliott wave nest, and we're gonna hope that's all just a bunch of gibberish, because if it isn't, and real estate and the emerging markets and MOO actually go to Kalamazoo, that's gonna be a big problem. And especially for there's a lot of young people, they complain about housing prices, and I have bad news for them. So we're going to talk about SCHH. But anyway, the whole point of all this that I just want to tell you, let's talk about, before we get into SCHH, let me talk about a different real estate ETF first. Because the whole point of all this was analysis for Jason, because he asked. I was like, you know what, and this is all of the large sum of my analysis, real estate, and my personal finances, and investing the huge dividend from Yield Max and what I'm going to do and all that. Real estate was a massive theme that I'm worried real estate's going to run off, and I was personally looking today for the best ways to invest in real estate because I'm aware of this, okay? So does every person in the world, do all the elites, do all the MMs, do all the big corporations, do they all spend as much time doing Elliott Wave and analyzing stock options as I do? They probably don't, okay? They probably don't. So they need some way to communicate to their buddies. They need some way to communicate to their buddies that real estate, all the stuff that I just said, you think they know that SCHH is about to follow the home builders? V&Q is about to follow the home builders. RQI is about to follow the home builders. A lot of ETFs, a lot of things related to bonds, and what's that going to do, and debt, and what that is going to do to, this is a huge thing. This is a large thesis. This is not just some, this is going to be a massive thing to miss, because people, like, just for me, if I miss this and MOO and real estate goes to Jupiter, essentially my income that I'm getting is going in half indirectly, and I'm going to get taxed on those gains. So that's why I was looking at SRHR. It's a real estate covered call ETF. I own it. I still buy it. It's got a liquidity problem. It's a little low on the liquidity. That's why I'm thinking RQI, 6% discount. I'll eat the expense ratio and focus on the performance to alpha, the underlying backing, and not having any coverage. Maybe I don't want any coverage to real estate because of what could happen to. Anyway, all of this was just a lot's gone into this analysis of how important real estate is right now specifically. And wow, what do you know? Today, I logged on to X and Mort was trending. MORT. Honestly, I think it might have been capital M-O-R-T. I really think it might have been capital M-O-R-T was trending. It might have just been M-O-R-T. But capital M-O-R-T is trending. Come on. This is the exact ticker. The exact ticker is this mortgage-backed real estate ETF. So Mort was trending because Chris Mortensen died. Mort was trending because Chris Mortensen died. And I was just like, wow, that's really interesting. Because I was just really thinking about how, with all this stock market and analysis I do, and all this analysis I do, the real estate's about to explode. And if there was someone I cared about for some reason that needed to be alerted that real estate and commodities were about to go to Jupiter so that they don't have their wage cut in half so they profit from it instead of getting wrecked by it, I'd have to tell them somehow in a large forum. And just look at this ETF, mortgage-backed securities. Kind of an important thing. I know it hasn't been great for AG&C and NRZ and some of these mortgage-backed REITs. What type of companies are in these? Let's just make sure we know what this ETF is, how important it is. It's kind of an important, I'm not going to invest in it, but just understanding, I'm going to invest in real estate. Sorry, I'm going to invest in real estate just because I think there's better ETFs. I think there's better ETFs than this. That's why I'm not going to invest in more. The VanEck Vector's Mortgage REIT Income ETF seeks to replicate as closely as possible, before fees and expenses, the price and yield performance of the MVIS Global Mortgage REITs Index, which is intended to track the overall performance of mortgage real estate investment trusts. So, mortgage-backed securities, mortgage REIT income ETFs, kind of a big one. Kind of a fundamental backbone of our economy. And AG&C, NRZ, they're important for, in some of these real estate ETFs, these specifically type of real estate ETFs are considered to be important because their income is coming. Their income is coming from, it's backed by a agency. It's backed by Freddie Mae or Fannie Mac. 16.15 is that low. And we're just going to look at how long of a cycle this has been. This is many years in the making. Big development. 18.94. I also thought it was interesting. It was RIP Mort. So Mort means death. And then it's while the mortgage-backed securities, and some people think mortgage because people are getting this mortgage and their house is so expensive they're in debt for like 30 years. So if you get laid off from your job, you're really kind of screwed. You're in lots of debt and you kind of have to be. So they tell everyone, hey, go buy a house, go buy a house, go buy a house. Don't live with your parents, don't live with your parents. You need a mortgage, or you need to be in an apartment. And, all this stuff. Hey, if your kids move back in with you, that's really bad. You need to have them go get a mortgage. Or you need to have them, be paying lots of rent and all that. But even just having a mortgage. If someone's got a mortgage and they start their job and expenses get a lot higher, well, they really can't say no to kind of anything that the employer says. From jabs to really it's not even just about that. I mean, I guess it is about that. We're going to find more about that. I mean, we're seeing lots of news about that. And I'll be honest, the same person that he asked, I told him, I think real estate's going to explode, and I'm buying Moderna, and I'm blending it with mRNY. And he just kind of looked at me. He was like, "What?" He didn't ask why I was buying Moderna. He was just kind of surprised. And I was like, well, I guess you'll find out why I'm about to make lots of money. So I think that that's just slavery with extra steps, and I'm not anti-work. I think people should have jobs and stuff like that. But anyway, mortgage, R.I.P. Mort. I don't know. I don't care if people have jobs. Like if you have a passion, you got a career, you really love what you're doing. That's awesome, right? But I think some of this, like if you're bent over in a kitchen 50 hours a week, you can love cooking, but that's not your passion. You're not. You know what I mean? Anyway, let me make sure I have these fibs right before I do a full critique of capitalism in this video. 29.90. Yeah, I'm not against capitalism, but capitalism are the reason I have these cool covered call ETFs like SRHR. Okay, capitalism is also the reason most of the people I know are de facto chained to cubicles. Anyway, 16.15. Oh, but they're free on the 4th of July. They always remind me of that. All right, let's hang out. 25.94. All right, you guys get the gist. Big development in the making for the mortgage-backed real estate sector. Mort. And real estate in general. So Mort is trending, and RIP Mort is trending all day because Chris Mortensen had died. Wow. So we're gonna look at this chart of Mort pretty closely, but just the general gist. We're gonna really look at the details of this chart. All this analysis, all this real. I got little reason to share. To be honest, I got little reason to share. Jason asked. That's the only reason. Jason and Vanesh ask. I'll do it. That's sweet. But yeah, some of these people though they got stuff. It's not like it's just some internet buddy, right? It's they got maybe they got dirt on them. Hey, you really need to make sure you let them know when real estate's gonna bottom. And of course, we'll do it through our strategic communications because the people who don't think like us, the sheep, right? They're kind of like cattle. They don't really matter, right? So they're not gonna even get it. But in the long term, wow. So that's why I was looking at MORT today. Now it is kind of looking a little more interesting now that I think about it. But it's not why I was looking at real estate ETFs. It is not why I was looking at closed-end funds. So let's just look at this Mort count a little closer. This is the long-term chart. Let's just zoom into this daily for a sec. Get some of this bigger stuff out of the way. We're just going to zoom in to the daily. I'm going to want to keep that because that might be the cover. Anyway, this is a really interesting count, even on the daily, down to the day. I'll admit it. Down to the day. Very interesting time for the exact ticker of this ETF to be trending. And a lot of it was in caps. So it's RIP Mort. Oh, and by the way, what do we say in the stock market when something is going up significantly? What do you guys say? What do we all say? It's ripping. It's ripping. Now, RIP Mort is trending. Do you see how obvious this is? And then, by the way, I also was talking about Scott's Miracle-Gro, and then President Donald Trump, randomly on his True Social platform, the next day, I talked about how they were dog whistling Scott's Miracle-Gro. Donald Trump, on his True Social platform, just randomly posted Scott free in capital letters. Right? You know how Donald Trump just acts like he doesn't know English, so he'll just put random words in capital letters even though no president would type. He's doing that because it's strategic military communications, if you haven't figured that out. So I've figured it out. Their code is stupid. It's really easy, and I really only give it attention when they ritually sacrifice someone. But yeah, this is how they told everyone to buy more. I found out to buy real estate the honest way. I found out that real estate was going to go to Jupiter with extensive analysis, years of research, and all this. You know what? But I guess I just need to have dirt on somebody. Because if I had dirt on somebody, then they might have to just tell me their strategic communications. They could just tell me to buy Mort Because they have to. Why do they have to? Why do they have to? That's interesting. An island? It's ripping. Mort is ripping. Yeah, you're going to be hearing that. Mort's ripping. R.I.P. Mort. Good for you, man. Mort's going to rip. This little cult is going to win, and they're going to make some money on their Mort calls because they're stupid, and they think that ritually sacrificing people and buying the blood is an actual thing that is necessary for assets to appreciate in capitalism. And realistically, they don't give a damn about any of that. This is all about satanic worship. Just to be honest, these people, it doesn't matter, and by the way, Satanism comes in a lot of forms. It also comes in like religious forms that you might not think are satanic. This is a ritual. They marked this fool up, man. What do you want me to say? How are they going to make real estate? Wow. R.I.P. Mort at the super cycle low. Look at this ABC correction. This is how I noticed that Mort was ending an ABC correction. Watch what happens to Mort. Watch what happens to Mort. Don't believe me, just watch. I've got all gold everything. And you know what? Shout out to them freshmen. They're on Instagram straight flexing. This is not a song that I can finish, but I am going to listen to it after I make this video. Realistically, this isn't the cleanest subdivision on this large degree. There's a lot more real estate ETFs, and I meant to just I probably should have picked a real estate ETF that had IPO'd a little less recently. The main cycle, though, is from this low, so that's why I'll it's the same thing. Yeah, ripping. Mort's ripping. I'm telling you, that's really how I know. That's really how I know. And you know what? I'll tell you something else. Do you think this is all crazy? There just so happens to be a video. Well, who is that? The Chiefs running back. I'm going to have a brain fart on that famous Chief. It's not Jamal Charles. It was the one that everyone thinks is crazy. He was really famous, and I just completely forgot his name. But a super famous Chiefs running back claims that he bet huge money on Joe Burrow and the Cincinnati Bengals, one of the most famous running backs ever in Chiefs franchise history, just so you know, claims that he bet a massive amount of money on the Cincinnati Bengals to win a very important game that was going to get them to the Super Bowl. Can't believe I can't think of his name right now, but he claimed that he bet a massive amount of money that the Bengals were going to win a game. Now, if you had been in the NFL, in the content, ad revenue, sponsorship era, and you were a super famous former professional football player, wouldn't you just tell people that you bet on the Cincinnati Bengals to win because you're an expert in football and you played football in the NFL for a long time? Wouldn't that be the easier thing to do? To get a bunch of podcasts? To get a bunch of sponsors? No. He said that he picked the Bengals to win because Regina King's son died. The fact that these are different colors might be a little confusing. But he said that, I'll just make these blue. He said that he bet on the Cincinnati Bengals to win because Regina King's son died. Something about the King's City, I don't know. Cincinnati's got some relationship to I don't freaking know. I don't get it. But he said the Cincinnati Bengals, the Regina King's son died, and that was how he knew the Cincinnati Bengals were going to win, and he bet on it. Like, isn't that just a wild, interesting thing to say? That's how in the world now where they're saying everything's scripted. Look, this might be a wild, interesting thing to say. I was making a video for one of my internet pals just kind of for entertainment. Absolutely not investment advice in any way. He asked me for an update on the stock market. All the years of research that I've done, and even down to specific options analysis from last week, have said it's time to ring the inflation alarm. I was legitimately going to make a video that was about inflation jitters. I was going to do a whole bit this week about having inflation jitters. That's a very pretty picture. But the real reason I know it's go time. It's not just. And by the way, I was obviously saying that I think SCHH is gonna enter wave 3, hold above. This is a little wide of. I'm just buying real estate. Honestly, I have downside. I have upside risk to real estate, so I need to buy it, and I will, and I am. And I don't have a stop loss for real estate, SRHR, and a fund like RQI. To be honest, I think I would take that to the dirt. I don't think it's going to the dirt. I think that bonds and convertibles and real estate, this is going to be a corner of the market that people have forgotten about that comes alive. But I found out that all with hard work, and it never felt like work because I love what I do. I really love what I do. It never feels like work. It's never felt like work for a minute, but I get paid like it's work. That's how I found out real estate was going to rip. RIP Mort. That's how a lot of other people found out.